And we are back. We're watching your ag commodity trade. It has been a choppy affair, to say the least, here today. All right. We started out, we had the corn flat overnight. It rallied after the open and then kind of fell apart by the wayside here along the way. And as we take a look at our prices right now, let's go to our quotes from bar chart here, and I'll show you what I mean. Now, on the corn, currently on the March contract, it's trading 2.5 higher. We went back to just fractional gains after going up 4, and now it's just starting to claw its way back. It has taken about 2.5 hours to gain a penny from where it has been. Most of the session, it was about 1.5 pennies higher. So maybe there's hope by the end of the day. On the soybeans, you have the January contract, 5.25 lower. March is down 4.75 at 13.21 3/4. It reversed out after having sharp gains overnight. It went lower this morning, but now it has come back about 6 cents, almost 7 cents off of its earlier low this morning. And at this point, we're down, well, it was 4.75 lower. Now we're down 5.25. So it's just chopping around on the minus side, at least for the moment anyway, but maybe it's working its way back. We got a little time yet. In the wheat in Chicago, you have the March contract 7.5 higher at 6.28 after that sale to China again overnight, but it has trimmed off about 8 cents from where it had been earlier this morning. In Kansas City, hard red wheat, March is a nickel higher. We're at 6.62 3/4. And in Minneapolis, the March contract is up just a penny. We're at 7.37 1/4, and that's about mid-range from where it's been trading through the course of the morning. And in the cotton market, right now, March is at 79.65. That's up 97 points right now. Oh, I have Ted Seifried on the line. Oh, this ought to be good. He is with Zaner Ag Hedge in Chicago, and we're going to talk about this market action here. Ted, anything in the grain and crop market side that you want to really point out, or is there something on the outside markets that you want to take a peek at here?
Let's stick with grains for the moment. Like you said, very choppy. We were higher overnight, trying to bounce back from the pressure that we've seen in soybeans for the previous 3 trading sessions. We just couldn't hang on to it. We slid lower, but now we're off the lows. So choppy, but it does feel like maybe we've exhausted the move to the downside for now, maybe setting up for a little bit of a bounce. Either way, the technical damage has been done. And in the meantime, you've got wheat having, really its best 4-5 trade sessions that we've had in quite a long time. So is wheat going to try to lead the grain complex higher? Corn caught in the middle of the two, by the way, but would kind of like to participate in some wheat strength. Corn's had a good string of 4 days now, while soybeans continue to be under pressure. And that soybean pressure, look, in a weather market, you're going to have people argue both sides. You see a lot of people on social media saying, hey, the longer term forecast for Brazil, it's not enough. Others will say, hey, this is a total weather pattern change. And even though, they're not in monsoon mode quite yet, it's headed that direction. And that's where the breaks come from. So now that we've had the break, now that we've broken some key support levels, the question will be, okay, is this forecast going to trend back drier again? Are we going to do like we did this last summer during our growing season, where we have these weather rallies and then give it all back and then rally again? We did it 3 times this last summer for our growing season. So, yep, weather market, we'll keep watching it. And then corn and wheat just kind of look like they want to do their seasonal tendency higher thing. It's been a long time coming. We'll see if it can follow through or not.
Do you think China has booked enough soybean product ahead to where they really don't have to be in any big hurry to buy any U.S. beans? They can be patient until the Brazil crop is ready?
That's a great question, Marlon. It feels that way. With the big, 5,000 or 5 million metric tons that they bought in their, visit to Des Moines, it feels like they seem to be good for now. Now, if you have that South American weather, that Brazilian weather trend poorly, once again, if that becomes a concern once again, that might be a motivation for them to come in and start booking some things. But until they're really worried about it, it feels like the market's not going to be really worried about it. You also see that they're having issues with their hog herd again. Whatever it is, we don't know, but their crush margins are under pressure. So it doesn't seem like they have this big need for soybeans up front right now. And if that's the case, that will allow them to sort of kick the can down the road until that Brazilian crop comes online, unless, again, there's a weather issue and they worry that it's not going to be there.
Now, thanks for teeing that up, because that's interesting. You say they may have problems with their hog herd. We're going to come back after a quick break here, Ted, and we'll talk about that because it doesn't seem to be helping our market today. Wonder why? We'll discuss in just a moment. Okay, well, as promised, let's take a look at this livestock trade here with a little help from Ted Seifried. And as you look at live cattle, we are hanging on to triple-digit gains across the board. They came back and they're hanging in there. We have February now up 177. We're at 168.85 at the moment, and that means we're within about 65 cents of our high of the day. On feeder cattle, let's take a look over there. Well, we had some real strong gains for a while. They were over $4 higher. I wouldn't say this is anything to sneeze at right now. You have March up 392. We're at 217.50 right now. Well, it's still more than $4 off of our earlier low this morning. We're off of that by $4.15. And again, I'll point out the most strength is on the nearby contracts there. Now, on the lean hog trade, they have really stumbled today. They just can't get any traction. February lean hogs are trading $1.52 lower at 69.27. April down $1.55. Let's talk to Ted Seifried about this. So I'm going to leave it on the lean hog screen here. And Ted, you were alluding to some issues with the Chinese hog herd. But if that's the case, wouldn't that make the hogs go higher today?
Well, no, not in the short run, Marlon, because if they're having an issue with their hog herd, that means there's going to be a lot of animals that come to market in a short period of time and a lot of product that's dumped up front in order to get ahead of whatever issues those might be. So for the short to midterm, there's going to be a lot of pork product available in China and really not a whole lot of a need for their imports of U.S. pork, or really from anywhere else for that matter. So short-term negative. Long-term, if this is another thing where they have to really kind of cull a good portion of their herd and then rebuild later on, there will be a window of opportunity for us to see a lot more exports further on down the line. When that is, who knows? It's China. We don't really get good information from them. We don't know what it is they're dealing with. Yeah. But we do know that their crush margins are poor and that their pork prices are low. Yeah. I don't think demand issue. That's probably something else going on.
That's interesting that you say it that way. Yeah, you don't know what to make of the data coming out of there. Thank you, Ted, for weighing in on the markets with us here. Ted Seifried of Zaner Ag Hedge in Chicago with a final look at our markets here before we wrap things up today.